Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Imagine being able to walk into your business tomorrow morning knowing that you've got $500,000 in a line of credit at your disposal with no personal credit check, no personal guarantee, and this is all based on your business performance and not your FICO score. That's the kind of financial breathing room that most entrepreneurs dream about. For a lot of small business owners, the thought of accessing that much capital without risking their personal credit sounds impossible. But there's one funding solution that's been turning heads, and that's a business card and FlexLine combo from Revenued. In this video, we're going to break down exactly how this works, how you can qualify even if your credit score is less than perfect, and the smart way to use this so you can keep running your business at full throttle. And by the end, you'll see exactly how a business with steady revenue can secure up to $500,000, all tied to your EIN and no personal guarantee. So without further ado, let's get right into the video. Let's start by discussing why this matters for small business owners. In some cases, traditional banks can be a nightmare for small business funding. They'll ask for 2 years of financial history, such as tax returns and spotless credit. And even after all of that, there's no guarantee they'll approve you. Now imagine you've been in business for 1 year. You've been grinding, you've been making sales, but you don't have long credit history or you had some personal credit bumps in the past. Most traditional banks will look at you as too risky. Now, this is where a revenue-based business model can work to your advantage. Instead of your approval being based on your credit score, Revenue looks at the money actually flowing through your business right now. And that means if you're pulling in consistent sales, even with less than perfect credit, you can still get approved. Think about it this way. If you run a small trucking company making $25,000 a month in revenue, but you have a low personal credit score, most banks would deny you. However, with Revenued, they'll focus on the $25,000 that you have coming in, not your 580 credit score. Now, let's discuss how the FlexLine offered by Revenued actually works. Revenued doesn't just hand you a card. They give you two tools in one. First, you get the Revenued business card for everyday expenses. And second, you get access to the Revenued FlexLine, which functions like a line of credit that you can draw cash from when you need it. This is powerful for one reason: flexibility. You're not just locked into using the card at vendors who accept it. If you need cash for payroll or you have a big order for inventory or even emergency repairs, the FlexLine lets you transfer money straight to your account. The amount of funding you can access with the Revenue FlexLine will be determined by your business revenue, your cash flow, and existing debt. As your company expands, your available FlexLine can grow alongside it. This makes it an attractive option for a business experiencing fast growth that needs consistent access to capital, but may not qualify for a large loan or a high limit credit card from a traditional bank. Approved account holders may be eligible for as much as $500,000 in working capital, and you'll only pay for the funds that you actually draw. There's no origination fee, there's no maintenance fees or draw fees, and since approvals are based on your business performance and banking history, not your credit score, the Revenue FlexLine and card can be a lifeline for owners with limited credit or less than perfect financial profiles. Now, here's where things get a little different and where most people need to pay attention. Revenue doesn't charge interest. Instead, they use something called a factor rate. Here's how it works. Let's say you borrowed $2,000 and your factor rate is 1.3. That means you'll pay back $2,600. Simple math, no compounding, no fluctuating interest rates, and no surprises. Most factor rates with Revenue run between 1.1 and 1.5. Revenue will determine your factor rate upon approval. You may be placed on a daily or weekly repayment schedule, and the exact terms vary from one company to another. But when underwriters review your application, they'll set your repayment frequency at the same time they determine your factor rate and the FlexLine limit. Once approved, anytime you draw from your FlexLine, finance charges will apply based on the factor rate. Repayments aren't manual, they're automatically withdrawn from your business bank account according to your set rate and repayment term, ensuring your balance is always paid down and on schedule. Unlike a traditional loan where you make one big payment each month, Revenue takes small payments from your connected business bank account. This works a lot like a merchant cash advance where they take a slice of your future sales to repay what you've borrowed. However, I want to be clear that a factor rate is not free money. You can dig yourself into a hole since repayments come out way more frequently. Your cash flow needs to be managed tightly. If your business has long gaps between when you spend money and when you get paid, you'll need to plan ahead. And while factor rates are easy to calculate, they can be more expensive than a traditional loan if you have access to alternative funding elsewhere. That's why this works best for businesses with steady and predictable revenue and quick cash turnover. Here's where a lot of viewers perk up. the $500,000 limit. Remember, Revolut sets your limit based on your actual sales performance and not your credit score. To qualify, your business needs at least 1 year or more of operating history. You'll need a minimum of $20,000 or more in monthly sales. You'll also need a business bank account with at least 3 months of activity. You will need to be a US-based business, and any entity type can apply except sole proprietorships. Keep in mind, this is EIN only funding. You're not attaching your personal credit or risking an asset as collateral. The top industries geared towards this flex line will be construction, food service, restaurants, healthcare, transportation, and other professional services. Applying for the Revenue Business Card and Flex Line is a very straightforward process. There's no hard credit pull, so your personal score will not take a hit. You simply fill out an application online, you link your business bank account, and in many cases, you'll have an answer within an hour. I actually have a full in-depth video that walks you through this process step by step, showing you exactly how it works from start to finish. If you want to see this in action, I'll link the video here so you can review it and watch it at your own pace. That way, you're not just hearing about it, you can actually watch me break down how the application should be filled out and follow along with me. Keep in mind, you'll need to have your business banking login ready. Once approved, you'll get both the card and Flex Line access, and from that moment, you're ready to go. Now, if you're serious about getting this card and you feel like you can qualify today, I've made things even easier for you. I'll have a link in the description so you can apply directly, but here's something special. If you drop a comment below that says qualify now, I'll personally send you an alternative link that connects you with a dedicated sales rep. This rep will prioritize your application and make sure your lead is moved to the top of the list so you can get the fastest possible response. I want to thank you guys so much for watching this video. The Revenue Business Card and Flex Line will give small business owners a rare combination of high funding limits with no personal guarantee and approvals based on revenue instead of your credit score. For the right business, this can be the difference between missing an opportunity and scaling to the next level. If your company has been operating for at least 1 year and you're pulling in $20,000 or more a month in revenue and you need a flexible way to access capital, this could be worth looking into for you. And remember, it's not about the size of the credit line that you have, it's about how you use it to create more profit and stability for your business. Once again, thank you so much for watching this video, and you guys have a wonderful day.